Aaron, Walmart, it's behaving like a tech stock lately. It's giving tech stock, as the kids say.
Absolutely. I mean, it's up over 80% in the last year.
Well, our guest this week explains what's going on with Walmart's winning retail strategy, and that may explain why the stock is valued more expensively than really it's ever been.
And what that says about the state of the consumer and even the luxury market. That's coming up in a little bit.
Hey everyone, I'm Telis Demos. I write for the Wall Street Journal's Heard on the Street. And this is WSJ's Take on the Week, where we give you a leg up on the worlds of money and investing. Each week, we bring you conversations with insiders and from inside the Wall Street Journal's newsroom about all that good stuff. And this week, joining me is my colleague Aaron Beck. He's filling in while Gunjan Banerjee is away. Aaron, welcome.
Good to be here.
Aaron is the editor of the Journal's Heard on the Street column, and so we've worked together a ton over the years.
Indeed.
This will not be our first conversation about markets, but it might be one of our most interesting. The hot topic. Let's start with what is trending this week. Inflation. The CPI report came in this past week, and inflation, it's not slowing down anymore. What is going on?
Yeah, so inflation came in at 3%, up from 2.9% the prior month. You know, not a big difference. But the story here, I think, is for a long time, inflation was coming down. You know, it peaked around 10% and it was slowing. But for several months now, it's basically been stuck around 3%.
Yeah.
And, you know, that means that the Fed might have a hard time justifying, cutting rates from here.
So the last report, the December report was, I think that the headline number was 2.9% year-over-year growth. Now it's at 3% as of January. So not a huge pickup, but the wrong direction.
So the Fed's target is 2. And, for a long time, they can make the case that it's moving down towards 2. But it's been around this level for several months now at 3. So it doesn't appear to be coming down anymore.
Well, what's interesting to me is, though the market's reaction initially was negative, it really hasn't derailed the bull market, which is what you might think would have happened, given past history about how the market feels about how many Fed cuts are coming, right? Yeah. Usually the market is very bearish when it doesn't feel like the Fed is coming in with additional cuts. I mean, it seems to me like, look, investors are greedy. They're still hoping for a big kind of fast growth, deregulatory Trump agenda that will, lead to more M&A, that will unleash, financial services and other industries. So it just doesn't seem like people are ready to give up on that.
Yeah, that's right. And so far, the tariff news hasn't, been terrible. It's been on again, off again. And, that's the one thing that could maybe derail this whole thing, but hasn't yet.
Yeah. It seems like the market is still kind of in the mode where it thinks that, what President Trump says about tariffs are more a negotiating tactic than this is actually the policy. But speaking of tariffs and China, I want to bring up a Chinese company's earnings that are coming up in this coming week, and that is Alibaba. I feel like that's a company we were talking a ton about a few years ago, but has fallen off the radar a little bit. But Aaron, I know you're following that one closely. Why?
Yeah, well, there's been a renewed interest in Chinese tech stocks since this whole DeepSeek thing, which, was, of course, a Chinese AI that appeared at least to, make a lot of advancements on the cheap. And so since that news, Chinese tech stocks have rallied. Alibaba's up around 37% so far this year.
Wow, okay.
But that's, particularly notable because a lot of these stocks are kind of dead money for years. There was a Chinese sort of regulatory crackdown on the tech sector. Those stocks were deeply out of favor for a long time.
And that's been true kind of across the Chinese market. I mean, last year, the Chinese stock market, the CSI 300, one of the main indexes, had a little momentum. It was up 15%-ish in 2024, but that was after several years of falling.
Yeah, so a lot of the Chinese tech stocks are listed in Hong Kong or New York, not in the mainland Shanghai index. That's a lot of state-owned enterprises and things like that in the mainland indexes. So that's not really benefiting yet from this rally in Chinese tech stocks. But that's another reason why the Alibaba earnings will be maybe interesting because their main business is this domestic e-commerce marketplace, Taobao. And so that'll give a read on the Chinese consumer who has been suffering for years from lower property prices and just a generally weak economy. So if the Chinese consumer is doing a little better, that would be a good sign for the broader Chinese market. If it's more of the same, sort of struggling Chinese consumer, then not so much.
Interesting. And of course, the Chinese consumer is not just important to the Chinese economy, but to the global economy as well. I mean, they're buyers of imported goods from all over the world, especially in the luxury market. They've been a huge part of that. And speaking of retail, I wanted to also move on to one of the big things coming up in the coming week, and that is Walmart's earnings report. Walmart has really been reclaimed its crown as the king of retail lately. What has been going on with that stock? It's gangbusters, isn't it?
Yeah, so Walmart is up around 80% the last year. It's trading like a tech stock, and they're really the king of retail right now. They're gaining share in sort of high-end consumers, low-end consumers. They're doing well in e-commerce. It's maybe the biggest success story in retail right now.
Is it something about the consumer, or is it something about their business, do you think?
It's something about their business. I mean, they're trading at around 33 times forward earnings. That's a tech stock multiple.
Okay.
It's not a retail stock multiple. So investors are excited about Walmart specifically.
And you mentioned their e-commerce operations.
That's right.
That's something that I think we should look closely for any sort of news on of, how much of their business now is coming in through Walmart.com and some of their other kind of digital offerings. So interesting. Aaron, this has been great. Thank you so much for joining me to talk about what's hot in the markets this week.
Yeah, my pleasure.
We're going to pivot to a conversation that I had this past week about the state of the retail industry. Dana Telsey is joining us. She is the CEO and founder of the Telsey Advisory Group. And she joined us to talk about how the consumer is doing and also what's going on with Walmart and also the broader luxury market, and maybe whether Walmart is the real winner in retail these days. After all, if people aren't splurging on luxury goods and they're also paying 53% more for eggs than they were a year ago, yeah, that's a real number. That's from the Consumer Price Index, the January CPI. Then maybe the basics are the sweet spot right now. So we're going to take a break, and after we come back, let's have that interview with Dana Telsey. Today, it's great to have with me here Dana Telsey. She is the CEO and founder of Telsey Advisory Group. Hi, Dana. How are you? Welcome.
Hi. Thank you so much for having me.
Tell us about what is Telsey Advisory Group? How would you describe it?
Telsey Advisory Group has been around for nearly 20 years. We are the consumer research firm that basically covers all of consumer, along with having a banking and asset management arm also.
Okay. It's a great time to talk, and I'm interested in now talking about the retail earnings season that's coming up. We have some big company earnings like Walmart and Target, as well as just lots going on about the state of the consumer. And in particular, I want to drill down a little bit into what's been going on in the sort of luxury market.
So just a little bit to frame it, overall, what we saw during the pandemic is a real increase in luxury goods sales, partially because in the U.S., the stimulus payments that aspirational customers got, they didn't have anywhere to go. They were spending on luxury goods.
Yeah.
Then fast forward, pandemic kind of ends, luxury goods soar, and you saw many of the brands taking price increases. Some of them where definitely consumers rebelled and are not really accepting of the price increases, and others where the exclusivity of the product makes the difference. Today, where we are
So the fancier, more expensive product you had, it was almost like you had more pricing power because
you did.
You had something that everyone wanted and they couldn't get anywhere else.
And there's not enough supply.
What's an example of that? What's an example of something that raised its price a lot during the pandemic?
Hermes raised its prices even post-pandemic, and there continues to be more demand where the double-digit sales increases are continuing.
Hermes, the ultra-luxury French.
Well, you can't access the goods because they don't produce enough. On the flip side, you've had others, potentially like the Chanels of the world, raise their prices almost to try to be similar to Hermes, but you're not getting the same reaction. And then you've had other brands in the luxury world, and a lot of these European luxury, where they may have raised prices, they don't have the same upscale nature in terms of price points that an Hermes has. And the fact that the Chinese aren't traveling like they used to.
Chinese consumers
the
are
Chinese
not.
consumers are not buying. That's been the impact of the LVMHs of the world.
Yeah.
So all of a sudden, what you're seeing out there is the luxury world sales growth is moderating from what it had been. And you're still not seeing the consumer from China traveling. They're spending within China and potentially even on some local brands from China.
So why has Walmart, though, been the superstar stock of the past year? I mean, their shares are up way more than pretty much anyone else that any of the other major players in shopping and retail and among the luxury brands and stuff like that. Are as people stop that kind of spending, are they doing more of Walmart type spending?
So a couple things in Walmart. First of all, they really have a diversification of where they get their revenues, whether it's the Walmart discount stores, whether it's Sam's. Keep in mind, 60% of Walmart sales are grocery. So the essential spend that you have there, people are going there. In addition, for them, where some of their highest growth has come from is some of their higher income consumers. The ability to get what you need, when you need, in a convenient format matters. Target is more discretionary than Walmart. But the other area that you've seen grow significantly is off-price. TJ Maxx, Ross Stores, Burlington. Brands at value prices matter. And you're certainly seeing companies like the off-prices delivering that, while Walmart's delivering value on essentials and really stepping up their pipeline of what's new and interesting. We still have work to do on Target because they're typically known as where they have collaborations that are very appealing on discretionary. And there's more that's coming there.
Yeah, I want to ask more about Target in a second because I think they're very interesting. And you mentioned kind of Walmart having growth at the higher end of their consumer base, right? And so there are a couple of things that have been going on with Walmart that really fascinate me that I want to see if you can help explain what that might mean for investors. One is, the Walmart Plus membership. I feel like has become a very successful product, and it's sort of ubiquitous, right? So Walmart Plus, of course, is like a subscription, kind of like Amazon Prime, many people are familiar with. And what's interesting to me about Walmart Plus is that it really seems to be aimed, again, at both, people who are on government assistance, like EBT. They can get a Walmart Plus deal, right? But also, I know that American Express offers it, right? So you have consumers really at both ends of the spectrum kind of coming together and saying, yeah, we see value in Walmart Plus, which of course gives them access to the e-commerce as well as other things. What does that tell us about seeing those two barbells of the consumer succeed with that product? What does that tell us?
I think overall you can see higher income consumers gravitate for the essentials. There is a convenience to having physical stores attached to the online sales too, both in terms of delivery and in terms of returns. And it shows the awareness of the Walmart name to consumers of all income levels in all regions. The data that Walmart has allows them to accelerate the community bond they have and really learn what should they be offering that consumers want. Marketplaces matter. The diversification of their sales and where they get it from is making them more essential to all different income and age groups of consumers.
Marketplaces, you mean like where lots of sellers can sort of sell goods through one website?
Yep, where you can reach the most consumers.
What has Walmart been doing to appeal more to those, to higher end or to wealthier customers? Like, what have they been doing? I know I've read a little bit about their sort of private labels and things like that. What else have they done? CEO Doug McMillon has said that they're really making inroads with high-end shoppers. What's been behind that?
I think the awareness and the marketing. I think the physical store locations. I think the loyalty programs, the essential nature of their goods, the ease of shipments that they've been delivering. They've been on time. And they've really showcased that this is not the Walmart of 30 or 40 years ago. Look what they did in their name. They took away the name Walmart stores because they're all channels in terms of appealing to the consumers.
Yeah, the e-commerce seems like they've really succeeded there. And again, a few years ago, people would have said, "Oh, nobody can compete with Amazon," and yet here they are. One episode for Walmart recently that I want to get your thoughts on is the Wirkin bag social media moment. So it kind of brings in a couple of themes. One, the sort of the dupe sort of theme in luxury, right? And I certainly don't want to call this particular product a dupe, but I'll just explain to people who weren't following it. There was recently a bag for sale, like a purse for sale on Walmart's website from a third-party seller, and it sufficiently gave kind of Birkin bag, the Hermes, thousands of dollars bag. It sufficiently gave Birkin vibes that people flocked to it as an affordable alternative, and it went viral on social media. People were TikToking about it. It got a nickname. The bag is not called the Wirkin. It's called something else, but people nicknamed it that. I also saw a couple of times the Hermès bag as well. What does that anecdote tell us about kind of what's going on in luxury and also kind of, so it's got the e-commerce angle there and are people sort of dropping down from the luxury? They're like, you know what? I don't need an Hermes bag. I'll get this Hermès bag.
So imitation is always the most sincere form of flattery. And definitely the Hermes buyer who's buying that bag that, as you said, is thousands of dollars, is not trading down to the Wirkin bag.
Okay.
The awareness of it gives others who want to view that style and that type an opportunity to access it at a much lower price. There's no need for Hermès to even make any comments on it because when you look at other styles where there are interpretations of what is popular at higher price points, that's what this is doing. If anything, it only creates even more awareness of Hermès if it's a bag and a style trend that should be emulated. But what it also shows is you have value that matters. It is garnered a wider appeal. Social media has fast awareness that goes global, and you're seeing trends be able to be deciphered quickly. I wouldn't necessarily say the Birkin is a trend, given how long it's been around.
Exactly.
It's been a desired item, not only by the wealthy, but those who aspire to have it also.
I mean, I feel like that the Birkin bag and Hermès exist really at the very highest tier of luxury, right? I mean, these are things that can cost many, many thousands of dollars,
and are even more valuable on resale.
And are even more exactly. So it's an heirloom item. So let's put that maybe in its own little tier. But I want to talk about what's going on in the rest of the luxury market, and that can include companies like Burberry, Kering, which owns Gucci, LVMH, which is of course the parent of Louis Vuitton. These companies have a more maybe diversified sort of luxury strategy, right? Where they have the very highest end and then, a little bit of what you might call affordable luxury, kind of micro luxuries that have been a little bit cheaper. What's going on with that market and what happens to, people who don't necessarily have Hermès' cachet, but are still, considered luxury?
So there's always that aspirational consumer who wants to be in that lifestyle. Yes, we had a slowdown in luxury sales recently, and we just actually put out a primer on luxury and are expecting an increase in luxury sales this year.
Okay.
We've had
so you think it was a short-lived slowdown maybe?
It may not be at the same rates that it had been, but it should grow.
Okay.
And when you think about the lifestyle selling of luxury brands, from entry points in cosmetics to high-end, whether it's ready-to-wear jewelry or leather goods. But what's changing lately, we have a change in designers for some of them, a change in management teams. We have a customer base that's changing and also where they're opening stores. Many of these European luxury goods companies want to open stores in the U.S. Take a look on Fifth Avenue where there are these Louis Vuitton trunks. They're on 57th and 5th where they're redoing their building. It is probably one of the most Instagram pictures and photos that's out there lately.
See, people always stopping,
You're seeing restaurants put into some of these luxury goods stores where there's waiting lists. So access to entry in the brand. Also, we're seeing in some cases, outlet centers. You look at Woodbury Commons here in the Northeast, you look at Desert Hills on the West Coast, and they'll have entry points to luxury goods from the luxury goods brands at discounted prices. So styles, value, but there's always a demand because of the aspirational nature that people want to interpret from others who they admire.
If I'm driving past the strip mall and I see a Gucci sign, should I be thinking, uh-oh, they're going down market, time to sell my stock? Or should I be thinking, wow, they've grown their audience here?
They're controlling their customer base. It's less than 10 malls that they could open in. So that's what I mean. It's not ubiquitous.
Okay.
But also, wouldn't you rather have that than be shown in third parties? And some don't even ever discount their goods because they will reuse some of the materials and make it into something else.
I do have to talk about Washington and policy, and I know that tariffs are something that obviously matter for retail and luxury in particular, and import business, right? We're talking about European goods, European companies selling to China, Chinese consumers shopping in the U.S., et cetera. What does that mean for retailers and for how consumers might kind of feel the effect of tariffs?
It's a headwind. Tariffs are a headwind. They're a headwind to companies. The accelerated diversification of supply chains costs money, and the element of increasing prices to the end consumer, which we saw last time, is a headwind, and it's a concern.
We're going to take a little break, and when we come back, we're going to have one last question for Dana Telsey. Welcome back. So we talked a little bit about Target at the top of the show. we talked about how Walmart has been like really going gangbusters lately. Their stock has been doing great. They're doing terrific with both the sort of the more kind of price sensitive customer and the higher end customer. But let's go back to Target. Target was once synonymous with kind of affordable luxury, right? You mentioned like discretionary spending. Target was the nickname I remember. So, but now it's struggling. The stock is not doing as well. It just seems to have lost some of its momentum of late. In 30 seconds or less, tell us, do you see a Target comeback in the near future?
Yes, I do see a Target comeback in the near future because I think the discretionary spend is getting more appealing for them. I think they're doing more innovative projects, doing more enhancements in their stores. I think it's going to make it more interesting as we go through the next year.
Okay, a target for investors to consider. Dana, thank you so much for being here with us. This has been a great conversation.
Thank you so much for having me.
Thanks so much. Alliterating anchors anxiously await. Okay, all right. Here we go. Does anybody get that joke? I always do that. Nobody. Broadcast news. Any big fans?
I wasn't listening.
Don't worry about it.
What was the joke?
Broadcast news. Albert Brooks.
I don't know what you're talking about.
Never mind.